Hi dear investors, you're watching a weekly roundup of main crypto news for the week from August 10th to 16th. While US regulators filed lawsuits to hamper access of digital assets to exchanges, Europe welcomed the first in history spot Bitcoin exchange traded fund. The Bitcoin Exchange Traded Fund was officially declared on August 15th. Its listing on Euronext Amsterdam, the stock exchange, was held by London-based firm Jacobi Asset Management. The rollout of Bitcoin ETF enables trading in cryptocurrencies on conventional financial platforms and enhances their popularity. Earlier, the US Securities and Exchange Commission green-lighted the launch of several Bitcoin futures ETFs, but it rejected all applications to create a spot instrument. The lack of clear rules allows the US regulator to act entirely at its own discretion. In particular, compile blacklist, rejects application and file lawsuits with the court. Crucial changes in the crypto industry could happen in 2024 after the presidential elections. Incumbent chair of the commission, Gary Gensler, might be replaced by a more loyal to digital asset policymaker. Meanwhile, the decision on approval for a spot Bitcoin ETF in the US is suspended indefinitely. Nevertheless, market quotes of Bitcoin and the whole crypto market are closely linked to the US stock market and the economic calendar. For example, this week, investors have been pouring their funds into digital assets. The inflow of investments totals almost $29 million. This market buzz is triggered by recent inflation reports in the US. CPIs came in a bit lower than expected, so the likelihood of another rate hike by the US Central Bank in September fell to almost zero. The correlation between the flagship crypto and the US stock market is getting evident. Does it mean that Bitcoin will again be at the mercy of the Federal Reserve? For sure. For example, yesterday the central bank released the minutes of its July policy meeting. The document reads that most policymakers voted for the hawkish agenda a month ago. The US dollar responded with an advance, though some officials could have revised their views in light of fresh statistics. In other words, even outdated plans of the US Fed reinforced the US dollar. Its value against the basket of 6 major currencies climbed above 103.5 to the highest level in the last 6 weeks. If we compare the dynamic of the US dollar index and Bitcoin, we see the opposite correlation. Thus, the main cryptocurrency is moving in sync with Wall Street. It's highly risky asset which gives to the firm greenback. Interestingly, Bitcoin is trading with smaller fluctuations than US stock indices such as S&P and Nasdaq, as well as gold. As the US dollar has been growing for 4 weeks in a row, Bitcoin's pullback from the landmark level of 30,000 looks logical. Over the last 7 days, the number one crypto has been locked in a narrow range from 29,100 to 29,636. After the release of the Fed's minutes and the US dollar's jump, the token retraced to 28,868, the lowest level of the week. To sum up, the range-bound market indicates waning investors' interest in the main crypto. As a result, Bitcoin's 30-day volatility in annual terms declined to 15.5%, the lowest ever point. The previous low of 18.9% was recorded in early 2018. It seems that the Bitcoin market is extremely exhausted, having entered the oversold stage. CoinGlass reported traders sold tokens worth $140 million in the last 24 hours. Bitcoin alone accounts for about $13 million in short positions. The second largest token in terms of market capitalization lost even more in the last 24 hours, nearly $17 million. The main reason behind capital outflow from the two most popular cryptocurrencies is their sharp price swings. Besides, meme tokens look more beneficial and lackluster assets with large market values. Skittish Solana, Pepper, Shiba Inu, and some other outpace heavyweights in terms of volatility, thus bringing profits to their owners. While Ether has been firmly stuck in the downtrend since April, the meme coin Shiba Inu, for example, has traded with higher volatility in the last few weeks. Ether traded lower inside a narrow range between resistance at 1,862 to support at 1,802. The overall trend remains bearish until the price breaks resistance at 1,950. In the weekly time frame, the price is much closer to the critical round support at 1,800. That's why the second popular crypto will hardly be able to spike to anticipated high. The nearest resistance is spotted at about 1,880. However, more realistic targets coincide with support levels at 1,800 and 1,790. The two leading cryptocurrencies are giving weight to the native token of Ripple Lab. Ripple has an advantage because of the commission charged for transactions. The Ripple public ledger records 1.2 million transactions in the amount of more than $1,660 in the last 24 hours. For comparison, 900,000 transactions in the Ethereum blockchain cost users $3.7 million. At the same time, the Bitcoin blockchain records 500,000 transactions, which brought miners $700,000. It means that despite its vague legal status, Ripple proves its almost efficiency as a worldwide payment system. Moreover, the partial victory of Ripple in lawsuit with the US Securities and Exchange Commission is still a handicap. In case of a final win or the replacement of Gary Gensler by a policymaker with a more loyal approach to Ripple, even a greater success is still ahead. Meanwhile, these bright prospects did not help the coin to strengthen last week. Its price first moved in a narrow sideways channel between 0.645 and 0.621. Since Tuesday, it began to fall deeper on the chart until it sank below the critical level of 0.58 cents per token. Nevertheless, experts foresee a recovery of Bitcoin and other crypto assets. The argument for the bullish outlook is that more financial institutions around the world buy and use crypto. Our review is over. Please leave your feedback. See you in a week on August 24th.